Hey guys, it's Greg Melvin with Real Estate News in Fort Worth. I actually decided to come in the office today for a little bit here at Helen Painter Group Realtors and do some work in the office. So anyway, you guys see the office. This is part of our office. And anyway, I wanted to talk with you today for a few minutes, just share a little education with you as far as how the some of the processes work in real estate. If you haven't bought a lot of houses or experienced in your life doing that, there's a lot of different parts of buying a house and selling a house. And as you can see, I've got my glasses on today, so I can actually see what's going on. But I wanted to just a little bit about closing costs and if you're buying a house, what are some of the costs that you're expected to pay? You have to realize that there's a couple different parts. You always hear about the down payment, or you can buy a house with nothing down, like the VA loans, or there's another one or two programs out there that have nothing down parts of them where you don't have to put a down payment. Now that doesn't mean you don't have to come out of your pocket with some money. It just means that there's no part of down payment part. So if you're buying a house, it's say a $300,000 house, a lot of folks will want to put down 10% or 20%, and so that'd be $15,000 or $20,000, $30,000. Unless you have a nothing down loan, then you don't have to put anything in down as far as a down payment, but you will have to pay other costs. And I'm just going to run through a little list of them real quick just to give you an idea. And typically your closing costs will run you anywhere to 3 to 4% of the purchase price of the house. So if the house is a $300,000 house, well, 3% of that is $9,000. So of course, all these are going to vary. There's not an exact until you get actually 3 days before the closing. The title company will give you closing documents that will let you know line upon line exactly what you have to pay out of your pocket. Some of those costs can be rolled into your loan. Some of them you actually have to pay for, write a check for them at closing. So real quick, we'll run through this list. I'm not going to take too long with this, but I want to give you an idea. One of the things is lender title insurance. Now, you always hear about a title policy. There's a couple things you need to know that in of course, United States, it is required if you're having financing, you're getting a loan for the house, the bank is going to require you to have a lender's policy on the title, and basically that's insurance that guarantees that the title is clean. So when the bank is loaning you money against the house, it means that they know that you own the property without any liens or anything coming against it. And so you're required to pay for that policy, even though it's for the lender. To get the money from the lender, they're requiring you to pay for the policy. Now, there's another policy, title company, that's called an owner's policy, which protects you. The title policy for the lender protects the lender, and in the event of there's a lien or something that would hinder their hinder their financing the deal properly. So you're protecting, this insurance actually protects the lender, whereas it doesn't provide the buyer any protection unless you buy the owner's policy. And I always encourage folks to buy the owner's policy, because you never know, something from 100 years ago could come back and bite you. The title policy, if you have it in place, then the title company's job is to, it's almost like car insurance. Like if somebody dings your car, then you turn over the claim to the car insurance company, and they file the claim and they take care of everything and rectify the situation. It's the same thing with an owner's policy or a title policy. We had a property we sold last year, and as we're closing, we realized that the back fence line is not where the deed said it was. And so those are the kinds of things that the owner's policy will take care of for you. Anyway, but that's just one of the things that are in your closing costs. There's a fee to record the deed at the courthouse. It's usually, 20, 50 bucks, whatever. A lot of times there's a courier fee because they're running documents back and forth from attorneys and banks and title companies, and there's escrow fees. Again, the title company in Texas, we use title companies. In other states, they use lawyers, attorneys, but in Texas, we use title companies. And so, the title company actually needs to get paid for the work that they're doing. In addition to all the other fees and stuff, the title company's got to get paid because they provide a very valuable service and they're worth every penny they charge. There are other things like your insurance, like your homeowner's policy insurance. The banks, if you're getting financing, the banks are going to require you to escrow money for taxes and to escrow money for insurance policies, so that say your insurance policy to cover your homeowner's policy is $2,000 a year. Well, they're going to require you to escrow 3 or 4 or 5 or 6 months of those premium payments in escrow, so that they know that they're being paid. So in the event the house catches fire and burns down, they know that the insurance is there to cover it. And typically, like I said, it's 3 to 6 months. Some of the banks require you to prepay that up for a year and a half and then have another 3 or 4 months, so 15 months sometimes. So a lot of times when you're getting a loan, from the banks, they're going to charge you an origination fee or a discount fees. The origination fee is typically 1 point, and 1 point is, again, if you're borrowing $300,000 to buy a house, 1 point is $3,000. If it's a $200,000 house, 1 point is $2,000. That's kind of how it works. And also, if your bank says, well, we can give you an interest rate of 3.75, but if you want to buy down that rate so you have a lower interest rate for the term of your loan, you can, and usually by paying 1 point, you can, for each point you pay, you can drop it, a 0.125% interest rate. Or if you want to get it down to, or a quarter, of a rate. It just depends on the bank and what they're offering. So, if you have a 3.75 loan interest rate and you want to drop it down to 3.5 or 3.25, they might say, okay, for 2 points, we can finance that at 3.25. So it's a way to get your long-term cost down for your interest. Again, there's an appraisal fee. The bank is going to send out, they're going to select an appraiser to appraise the house that you're buying, and they want to make sure that the house is worth the amount of money that they're loaning for the house. So, and those fees are usually anywhere from $400 to $600. The bank sets that up, the lender sets that up, but you pay for it. And again, as part of your cost of getting the loan from the bank, getting the money from them. That's how it works. A lot of times they'll charge, a fee for, $50 or $75 to run a credit report. You need to, the bank needs to know your credit rating, your credit score. Typically, 640 or better is the lender's requirements to. They have, different banks have different rates. Some of them are at, down to 620. I know Jonathan Sandu is our preferred lender that we use, and he was saying the other day that they have now gotten theirs down to 620. So you don't have to have a perfect credit. You don't have to have an 800, 850 credit score to get a house these days. There are a lot of banks out there who are have a lot of different criteria to help make it work for you. Lender have doc fees, prepare, because they have different, criteria. Again, every bank lender is different. Some of them charge these fees, some of them don't charge those fees. Some of them are considered, junk fees, where it's just like extra, profit for the bank. So you want to, as you're going through your documents, you want to look at these different fees and realize, well, maybe that's a junk fee, maybe that's something they can waive and they don't have to pay it. But a lot of them are just, legitimate fees that, that have to be charged and have to be paid. flood certification, mortgage insurance premium is something I want to take just a minute on. Mortgage insurance premium is if you're getting a loan that's FHA loan. It's called well, MIP or PMI. PMI is private mortgage insurance, which is the same thing as a mortgage insurance premium. It just depends on the type of loan. If it's an FHA loan, it's called PMI. And what it is if your loan is more than for 80% of the value of the house, so you get a 5% loan or a 10% loan, and you only had to put 5 or 10% down, well, then you've got a difference between the 80%, or actually it's 78% value of the house versus the balance, where you didn't put the money down. So you say, for easy numbers, let's say you got a $100,000 house you're buying. You put down $5,000, so you're going to get a loan for $95,000. So between that 78% and that 95%, the bank wants to make sure that that's covered in the event that you default. That money is going to be paid to them, so they require you. Again, this is another fee that you have to pay. Is the private mortgage insurance, and that's basically it's an insurance policy that guarantees that the bank is going to get their money in the event that you default. So the way you can get out of paying PMI insurance is to put down a larger down payment, so that you're below, you put 20% or 22% down. You typically don't have to pay that PMI insurance. And again, for the lenders, for them to find out, to make sure that their bases are covered. And again, you have to play the game, because they're not going to loan you the money if you don't do it. So, that's the way it works out. That's why if you can pay cash for a house, that's a great deal. Pay cash, you would save yourself a lot of fees and a lot of money if you're in a position where you can pay cash. Typically your fees will run you anywhere from 3 to 5%. As I was saying earlier, so if you're on a $200,000 house, you're looking $6,000 to $10,000, $12,000 just in fees that you have to pay. Again, another thing, there are miscellaneous loan fees. Again, every bank, has a lot of the same fees, but then some banks have their own fees that they charge. There's also, you're going to pay if there's a homeowners association in the neighborhood that you're buying in. You'll have to pay. Typically, there's a transfer fee. Because you're transferring the HOA from the former owner to you, to their owner, and they'll charge a fee for that. Typically, they require you to pay the next quarter's worth of HOA dues up front, and a lot of times they'll also ask you to put down an additional deposit. So for, just to make sure that everything, and you stay paid, because a lot of the HOAs have the ability to, if you get behind on your HOA dues, they can foreclose on your house. So you want to make sure that the HOAs are paid, they're paid in full, and you keep those guys happy. And because you can be paying your mortgage fine, and you're not behind on your mortgage or anything, but you're behind on your HOA. The HOAs have, in their bylaws that says if you don't pay the HOA dues, we can foreclose on your house and they'll take over your house. So you want to avoid that. So if there is an HOA that's in your neighborhood, just keep those guys paid, keep them happy. Anyway, and you're agreed to do it anyway when you're buying the house. So it's just you're doing what's right, what you're supposed to do. There's always an inspector to come out. When you're buying a house, you want to make sure that the house that you're buying is a good, solid house and there's no issues. You're going to pay the inspector out of your pocket. Very often, also, you're going to have a termite inspection, and your home inspector can either do the termite inspection himself, or he can contract another termite guy to come out and take care of that for you. So typically, they'll take care of that for you all in the same day as your inspections, so that it's a done deal and you don't have to worry about it. And so the point of the inspection is this is for you to know the condition of the house you're buying. You don't want to buy a house and then you move into it and 2 months later there's a big surprise. The foundation's cracked, the roof's leaking, they use aluminum wiring, and so the wires are shorting out and the circuit breakers are tripping, and all your water sprinklers busted, or your irrigation system and all those kinds of things. So that's why it's money very well spent for you to know that the house you're buying is in good condition. And if the inspector, he works for you, so his job is to find what's wrong with the house, even if it's little minuscule things. If there's a light switch, that one light switch in the house, in the whole house, one light switch doesn't work, well, that's his job to find that. If the handle on the toilet's broken, that's his job to find that. And so that's why you're paying him the money, and that's money well spent. And again, but again, once he gives you his report, and usually very often he'll give it to you the same day or the next day, and once he gives you that report, then you can go through it line by line, item by item, because he's going to go through everything from the roof to the foundation and everything in between, and he'll say, this is good, this is an issue, this could be an issue, the HVAC needs servicing. It could be one of many things, but at that point, then you're able to take this back to your seller, the house you're buying, and say, look, we offered our price that we offered in good faith at this price, and so we decided to, the phone's ringing, and so I'll catch that in a minute. So, but the inspector's report is to give you an idea of what is good or bad about the house. So then you can, if there are issues, you can take those back to your seller and say, look, okay, you can either fix this, or we need to drop the price of the house. You can use it as a negotiating point, or you can just say, you guys fix it and we're still going to buy the house. If you don't fix it, we're not going to buy it. So that's why the inspection, having your own inspector is well worth the time and the money. And again, any other cost, there can be just assorted miscellaneous costs that come up. And again, a lot of these things are negotiating. When you're buying a house, you can negotiate these. And another point too is a lot of times you can ask the seller to help cover some of your costs. Now, if it's a VA loan, the VA will allow the seller to pay up to 4% of your costs. If it's an FHA loan, FHA will allow the seller to pay up to 6% of your costs. So again, there's a lot of options, a lot of things you can look at. And anyway, we just wanted to, this is part of our educational series for folks that have never bought a house before, or you're renting, you're looking maybe to buy, and you don't know anything about the process. Well, we're offering some of these videos just to kind of help give you an idea of what you can expect when it's time to buy a house or to sell a house. And again, my name is Greg Melvin. I'm a broker here in Fort Worth. My number is 402-216-5984. That's 402-216-5984. Again, please comment down on the section. I'm new to this YouTube thing, so I know that they really like it when you comment and when you click on subscribe. So we're in the process of getting all that done. Again, this is all brand new to me, so be patient and love me anyway. Anyway, you've got my phone number. If any questions you have about buying or selling real estate, that's what I do, and I really enjoy it, and I love helping folks do it. To get into their first home or their new home. The rates are so low right now that you can buy a lot more house this year than you could last year this time for the same dollars. And you've been waiting maybe to buy that house on the lake, to buy that dream home. You're ready to sell your house and move up into your dream home. Now's the time to do it. It's the COVID-19 and everything going on. There are less properties on the market right now, and it's so kind of a seller's market. So if you've got a house to sell, this is the perfect time to sell, because there's not a lot to folks to choose from. And for folks that are looking to buy, we have some separate programs. We have a Dream Home Finder program where we go out and look for homes for sale that are not in the MLS and they're not listed for sale anywhere. But we've got a special program where we go do all that and find that house for you at no charge to you. So anyway,